Welcome to the Deep Dive. Today we're jumping straight into the Web3 world, specifically looking at what happened in July. Our main source is the latest DappRadar industry report. And July, well, this was quite a month. Some really interesting shifts, few record highs, but also, yeah, some tough lessons learned.
Absolutely. You could really call July a month of, let's say, changing lanes for Web3. It's not slowing down, not really. It's just evolving. We saw so much happening across the board, DeFi, NFTs, AI. It's quite a complex picture.
Okay, let's try and unpack that picture then. Starting with the overall user activity. The big number was 22 million daily active wallets.
Right, 22 million. But that was actually an 8% drop compared to June.
An 8% dip, so maybe that summer slowdown we sometimes see.
Could be. And some sectors definitely felt it more. Social dapps, for instance, took quite a hit, down 27%.
Wow, 27%.
Yeah. And AI usage also dipped a bit, about 14%.
Okay, so declines there. But did anything hold strong or, shift focus?
Well, this is where it gets interesting. Gaming actually went up slightly, about 2%. It kept its top spot, holding around 22.4% of the market share.
So gamers are sticking around.
Seems like it. They might be a more resilient user base. Then AI came in second, despite the dip, at 18.7%, and NFTs were right behind at 17.5%. And here's a fascinating bit. For the first time in quite a while, DeFi slipped behind NFTs in terms of user activity.
Really? DeFi behind NFTs, that is a shift. What does that suggest, do you think? Maybe less focus on pure speculation.
Possibly, or maybe a growing interest in what NFTs can do beyond just trading.
Okay, and what about specific dApps making waves? You mentioned Solana DXs were still dominant.
Oh yeah, definitely. Still riding that meme coin wave, Seems like that energy hasn't faded yet on Solana.
Yeah, the meme coin thing.
Keeps going.
And in gaming.
World of Dippians was still a big one. Really seems to have found a way to keep players engaged long term. Shows that stickiness factor.
Good engagement, right? And AI. Even with the overall dip, were there standouts?
Yes, absolutely. That's the other side of the AI coin. We saw projects like Dmail Network and ChainGPT climbing into the top rankings.
Email and ChainGPT.
Yeah. It suggests AI is moving beyond just like theoretical hype. It's becoming a practical tool people are actually using day to day in Web3.
Interesting. So even with a slight overall dip in AI users, specific applications are gaining real traction. It's becoming foundational.
Exactly. And July saw some pretty significant foundational developments in the AI space, too, beyond just those top dApps.
Like what? What were the big moves?
Well, on the infrastructure side, you had things like Lightchain AI launching its mainnet. They're using something called proof of intelligence.
Proof of intelligence, okay.
Yeah, basically a new way to verify AI computations on chain. Could be big for verifiable AI. And Aether hit a billion compute hours.
A billion. Wow, so their decentralized compute network is really scaling up.
Massively. Then you had strategic moves, too, like the ASI Alliance forming that's SingularityNet, Fetch.ai, and Ocean Protocol merging.
Merging to build a unified AGI stack. That sounds ambitious.
Very. And you also saw Olympics roll out their LLP token for what they call AI-powered agentic gaming, so new gaming paradigms, too.
Agentic gaming. Lots happening.
Definitely. And even the investors noticed, right? Tokens like TAO and RNDR, which are tied to AI compute and networks, got a boost, shows growing confidence.
Okay, so incredible innovation, real adoption.
Yeah.
Seems like AI's time is really coming. But you mentioned earlier, there's a darker side, a double-edged sword.
Yes, unfortunately. And this is, well, it's pretty chilling, actually. Researchers built an AI agent that could autonomously find and exploit smart contract vulnerabilities.
Autonomously, so an AI actively hacking smart contracts.
Exactly. It fundamentally changes the game for Web3 security. Human auditors are now potentially up against AI finding bugs faster than we can.
That's quite alarming. It forces a rethink of security, maybe needing AI to fight AI.
Precisely. How do we build defenses against that? It's a huge question. And it ties into the broader security issues we saw in July.
Right, because it wasn't just theoretical risks. Hacks were actually up, weren't they?
They were up 16% from June, according to the report, which, is always concerning.
What were the major incidents?
There were three pretty big ones. CoinDCX lost around $44 million. GMX V1 on Arbitrum, that was about $42 million. And Big On Exchange lost $28 million.
Ouch. Significant amount. Were user funds impacted directly?
Mostly no. In these cases, user funds were largely reported as safe, which is good, but it highlights ongoing vulnerabilities, often in the smart contracts themselves or through things like phishing attacks, tricking users.
So the tech is powerful, but the weak points are still there.
Absolutely. The report really stresses basic vigilance. Always check permissions before connecting to a DApp, be super careful about suspicious links, use hardware wallets for serious assets. Security is still a major work in progress. Constant battle.
A constant battle indeed. Okay, let's shift gears from the risks to, well, some truly mind-blowing growth. DeFi in July. The numbers were just off the charts.
Yeah, off the charts is a pretty good way to put it. Get this. DeFi's total value lock, the TVL, hit an all-time high.
All-time high. How much?
$270 billion. That was on July 28th. And that's a 30% increase just from June. 30%.
Wow, $270 billion TVL, up 30% month over month. That's staggering. Ethereum's still leading the pack.
Oh yeah, Ethereum's still the giant with $166 billion of that. Solana came in second at $23 billion.
Okay, but sometimes people say TVL can be misleading, right?
Yeah.
Rising token prices just inflate the number. It's not necessarily new money coming in. Did the report address that?
That's a very fair point, and yes, rising prices definitely contribute, but the report also suggests genuine new capital inflows and, importantly, increased user engagement. It wasn't just prices going up.
Okay, so real growth underpinning it. What else stood out in DeFi?
Something really striking was the explosion in tokenized stocks.
Tokenized stocks, like Apple or Tesla on the blockchain.
Essentially, yeah. The number of wallets interacting with them went from about 1,600 to over 90,000 in the month.
Whoa, from 1,600 to 90,000 wallets.
Exactly. And the market cap for those tokenized stocks jumped 220%. It shows this huge appetite for bringing real-world assets on-chain, making them more accessible.
That's bridging TradFi and DeFi right there.
Absolutely. And speaking of bridging, on Solana, a platform called Hyperliquid basically took over perpetuals trading, handling over 60% of the volume.
Perpetuals.
Oh.
So, like crypto futures trading.
Pretty much, yeah. Complex derivatives trading surging on Solana shows growing sophistication. And then there were big move on the regulatory front, too.
Regulation. Always looming. What happened there?
In the U.S., lawmakers actually passed some bills on stablecoins and classifying digital assets. Plus, they unveiled something called Project Crypto.
Project Crypto? What's that about?
It's an initiative specifically looking at how tokenized assets could link DeFi liquidity directly with traditional finance. Think streamlining settlements, asset management. It's potentially huge for mainstream adoption.
Okay, so serious steps towards integrating DeFi with the established financial world. Very interesting. Now, what about NFTs? You said they overtook DeFi in users, but the trading data was a bit weird.
Yeah, it was counterintuitive at first glance. Trading volume nearly doubled in July, hitting $530 million. Massive jump.
Doubled volume. Okay, sounds great.
But the actual number of sales transactions went down 4%.
Huh. Volume up, sales down.
How does that work? It means the average price per NFT absolutely skyrocketed. It jumped from around $52 in June to $105 in July.
Wow, average price doubled. So fewer people buying, but spending much more per NFT, like high-value item trading.
Exactly. It suggests a shift maybe towards higher-value art or utility NFTs rather than just cheap collectibles, and the marketplace dynamics reflect that too.
How so?
Well, Blur dominated Ethereum volume, capturing like 80%. That's where the high-frequency, high-value trading seems to be concentrated.
Right, Blur for the power traders.
Yeah. But OpenSea still had the most daily users, showing it's still the go-to for broader access, maybe smaller purchases. And Zora was gaining ground too, focusing on creators.
Interesting split. And are big brands still playing in this space?
Oh, definitely. That's perhaps the most significant long-term trend. We saw continued pilots and engagement from huge names. Nike, Louis Vuitton, Rolex, even Coca-Cola China.
Wow. Major global brands. What are they doing with NFTs?
They're experimenting, using them for loyalty programs, digital collectibles tied to physical goods, exclusive access. It signals that NFTs are moving beyond hype. They're starting to demonstrate real utility for identity, for ticketing, for in-game items you actually own, even tokenizing real-world assets like property. These brand pilots are paving the way.
From hype to utility. That seems like a key theme for NFTs then.
I think so. It's maturing.
Okay, so let's try and wrap this up. July in Web3. It feels like a real mix. We had record-breaking DeFi flows suggesting serious financial innovation has happened.
Right, billions flowing in, new bridges to TradFi being built.
Yeah. Then a surprising NFT resurgence, not just in price, but hinting at real utility, moving beyond collectibles.
Yeah, brands getting involved, average prices way up.
And then AI. A complex story. Huge innovation, new infrastructure, but also a slight user dip overall. And that pretty scary security risk emerging.
The double-edged sword, exactly. Massive potential, but new challenges too.
And underpinning it all, that constant reminder about security vulnerabilities and the hacks that happened.
Can't forget that. Vigilance is key.
So what's the big takeaway from July? Is Web3 cooling off like that initial 8% user dip might suggest, or is it something else?
I'd say the clear message is Web3 isn't cooling off, not really. It's evolving, it's adapting, it's maturing. July's data just shows how dynamic this ecosystem is. It's constantly shifting, finding new avenues for growth, tackling new problems. It's very much alive and kicking.
A constantly evolving landscape. Well, thanks for helping us unpack it all today on this deep dive into July's Web3 trends.
My pleasure. And for everyone listening, just remember, in Web3, staying informed, really understanding these shifts, that's probably your best alpha. It's your best advantage. And honestly, sometimes your best protection too. Makes you wonder what August will bring, doesn't it?